I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level, and that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way, and then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, that seems like a deal again. That's where you really see it take off. I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play.
After months of sideways action, Bitcoin might finally be ready to explode. With demand surging and supply vanishing, breaking $105,000 could send prices flying toward $125,000 to $130,000 before the next cooldown, according to James Lavish, Chartered Financial Analyst, finance educator, and managing partner at the Bitcoin Opportunity Fund. Right now, Bitcoin is flirting with $100,000, and once it clears that line, things could get wild. Lavish sees this as the final hurdle before liftoff. For weeks, Bitcoin has bounced between $90,000 and $100,000, shaking out weak hands while smart money loads up. But with retail FOMO creeping in, once that key level flips into support, supply could disappear instantly, sending Bitcoin into full-on price discovery mode. Lavish is still calling for $180,000 by fall 2025, convinced that once $100,000 becomes support, the next leg up will be fast. The setup is already in place, and the next explosive move could be just around the corner. Make sure to stick around to the end of the video, as James Lavish explains why this breakout could be even bigger than anyone expects.
We still have this $36.5 trillion of debt we've got to deal with. And how are you going to deal with that? Well, this is where the Bitcoin Reserve Act comes in. So Senator Lummis from Wyoming, her idea is, look, why don't we buy 1 million Bitcoin over 5 years? And over time, if you look at the performance of Bitcoin and how it is retaining its value against the debasement of all other currency, that reserve will enable us to pay down a very large portion of the debt in the future, or back treasuries with it, which will stabilize the treasury. And that ends up stabilizing the US dollar. Because the biggest issue that we have right now, which has been growing over the last number of years, is that we're seeing sovereigns reluctant to hold treasuries. Now, everybody around the world needs dollars. The US Treasury is the reserve asset of the world. But we made some, key mistakes in this last administration, like cutting off Russia from SWIFT and seizing their assets, including treasuries. This just signaled the world that, well, you don't want to be holding treasuries unless you're a very, very good ally of the US, because they could just seize them from you. So we got to find something else to buy. So they've been buying gold. That you've seen that. A lot of them have been buying gold. And they've been buying Bitcoin. And so they know that it will hold its value over a long period of time against the dollar. So the previous thinking was, if you hold treasuries, you'll make an interest rate that'll give you at least a neutral return, if not a positive real return on that debasement, meaning the inflation is going up. You need to make more interest on your bonds to keep up with that inflation. Do we want to hold those now if they can be seized from us? That's an issue for all the BRICS countries. And so that's why you're hearing them talk about, they're not trying to, create a new currency for them. They just want to be able to get away from the treasury. That's the issue. They know that they're still going to need dollars. So that's the whole point. The Bitcoin and the strategic reserve then starts this game theory where all of these sovereigns have to consider, what if the US owns 5% of the Bitcoin, total Bitcoin float, and we own none? That's a problem. So now you're seeing countries step in and start putting Bitcoin on their balance sheets because of this, because they know that this could be a big problem if we don't own Bitcoin ourselves. There are two paths, like you just said. Cynthia Lummis, she has the Bitcoin Act, and that would be the Bitcoin Strategic Reserve that we talked about, the million Bitcoin over 5 years, 200,000 Bitcoin a year. That would be the first. That's one that we've heard of. Also, we've heard since Trump was elected, people rumbling, talking about possibly an executive order. So what would that look like? Well, through the Gold Reserve Act of 1934, it's possible, use the Exchange Stabilization Fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. You could do it overnight and start accumulating Bitcoin immediately. So what does that look like? Well, there's $200 billion in that fund, but that's not all available for Bitcoin. There might be 40, 50, or 60 billion available, maybe as much as half of it. He announced that order that Bitcoin's going to run pretty quickly because of what you just said. Everybody and their sister and brother are going to be out there buying it, not just other nations. You'll see a supply shock. The big thing is not so many people out there buying. It'd be a lot. It would be the other half of it is people be reluctant to sell. Like, I'm not, if the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. That's one path. I think it's pretty low likelihood because there's some reasons for that.
As global currencies weaken, Bitcoin has held strong against inflation and economic uncertainty. This has fueled discussions about using it as a modern reserve asset, much like gold. History shows that financial systems can be restructured in response to crises, and some see Bitcoin as the next strategic move. A more aggressive proposal suggests using an executive order to accumulate Bitcoin through the Exchange Stabilization Fund, which holds $40 to $60 billion. If implemented, this could reshape global finance and position the US at the forefront of Bitcoin adoption. With governments and institutions increasingly focused on Bitcoin, the question is this the start of a financial revolution or a high-stakes gamble with the US economy? Let's go back to James Lavish as he discusses further.
Bitcoin Opportunity Fund is an investment vehicle. It's like a hedge fund that invests in the Bitcoin space. And we focus on later stage companies. We can invest in both public and private companies. When we launched this fund, Alan, it was at the depths of negative sentiment in this space. We just had FTX and Sam Bankman-Fried and Celsius all collapse and fraud, and it was just and Bitcoin had collapsed all the way down to under 20,000, and we were out there trying to raise this fund and explain to people this tremendous opportunity. Meanwhile, while we're doing that, we had the last administration who was so antagonistic on the space, refused to give clear legislation or clear regulation on it, and was attacking the space through something called Choke Point 2.0. We even had investors trying to wire us money, and the wires were canceled, or they were returned, they were refused, they were debanked. It was a pretty ugly moment. But we did end up cobbling together enough money, enough investors. This is worth it for everybody. Let's go forward. Let's do this. And so since that time, we've doubled the assets. We've returned over 80% net to them in just over a year. And so now you flash forward to today, Bitcoin's hovering around 100,000. It's peaked over it before. And the conversations are completely different. You guys invest like we do traditionally. We understand you guys have been in this space. You and David have been doing this for almost 30 years each. And you are looking at the space kind of like we do and looking to get us a better risk-adjusted return than just investing in Bitcoin alone. And that's the whole point. The conversations have been completely different and super encouraging. Like I said, we're focused on getting real returns for our investors. And so if you liquidate our portfolio, you get what's in your statement. That's a big difference between us and the VCs. We don't have any reason to mark our privates up right now, so we're leaving them at cost. But that's a little bit of a distinction. What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin, but they're wanting to hold MicroStrategy. They're looking for ways to augment their returns, And they know now, looking back on the returns of the past decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly, and which means it would raise your risk-adjusted return to your overall portfolio. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's a very large one. But they're a massive holder of this. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio.
The Bitcoin Opportunity Fund is thriving in chaos. Launched during the collapse of Celsius and FTX, increased regulatory scrutiny, and a shaky crypto market, the fund expanded its assets and delivered an 80% return in under a year. Bitcoin was once dismissed as a speculative bubble. But now, Wall Street is moving in. Hedge funds, private offices, and institutional investors are increasing their exposure, reinforcing what Michael Saylor has said. Bitcoin, once an experiment, has become a revolution. Bitcoin ETFs have accelerated adoption, attracting firms like Morgan Stanley, D.E. Shaw, and Citadel. These firms are securing long-term positions, preparing for a surge in institutional capital. The floodgates are opening, and the world of finance may never be the same. Anyway, guys, before we go, if you want to stay most up-to-date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one. And as always, all the best.